Hello, everybody. Brian here from quantlabs.net. In this video, we are going to talk uh, about four articles here. Let me show them to you so you know what we're getting into. First one here from Yahoo Finance is Apple, the best stock to buy, according to Jim Simons, Renaissance Technology. Next one are the top 15 stocks, according to Jim Simons, Renaissance Technologies. Then we'll get into a $42,000 quant course for the 325 hedge fund jobs. And then a VP software engineer is complaining about his Goldman Sachs offer. Okay, let's do the most important one, or most popular one. This is Yahoo. And I want to say thanks to somebody, my usual source of information, for sending some of these articles to me and highlighting them. So the first article here is Apple the best stock to buy? So we talked about that article. I'll go to that in a minute. Best stocks to buy according to Jim Simons, Renaissance Technologies. Now, I guess this is fairly recent. So as you know, he died in 2024. He was a Quant King of the hedge funds. He had, as I say here, extraordinary success at the firm, which he owned and started in New York. He's done a lot of researching in the financial industry. The untapped potential of employing quantitative analysts. I think he's one of the first ones to get into it. Um, I did put out an interview video about a week ago about Ken Griffin claims he started the high frequency trading phrase. So continuing along. So the insight of Simons led to develop a data-driven investment strategy analyzing uh, the market. I have to say, Temu is very good at their ads. Led to develop data-driven investment strategy analyzing market behavior using statistics and mathematical models. Subtle, non-random patterns in financial data. I'm not sure if people really know what those models and how they work. I mean, there's various posts that I posted among other people out there. So, anyways, he was able to identify subtle, non-random patterns in financial data. Quant Genius predicted future stock movements and generated impressive returns. When it comes to AI now, I think AI is on the same level from what I've tested. I've shown you in some of my more recent videos where the AI is very, very intelligent and goes beyond what Jim Simmons and his firm was able to do, because the AI is just right now so advanced, which is obviously not human based. It's, as we know, it's computer based. So, anyways, the fund, his medallion fund, was closed off to outside investors. He had groundbreaking results, had impressive returns of 57 to 75% returns during the early 2000s dot-com crash. That's impressive. The global financial crisis between 2007 and 11. The fund maintained a substantial annual return of 30%, 31% since the first 2 years of operation. At the time of his death, Simons was worth 31 billion, ranking him among obviously one of the most wealthiest. I do have an article if you want to find on my website, quantlabsnet.com. You can find on there that, yeah, um, or RenTech had a real bloodbath with that Liberation Day. They lost quite a bit of money, but knowing them, they probably quickly recovered. Anyways, so RenTech, computer-driven powerhouse, came to a great start after a stellar performance in 2024. The Institutional Diversified Alpha Fund gained 9% as of Feb, continuing to build an impressive 2024 15.6 return since its inception in 2021. The Renaissance Institutional Equity Fund had its best start in 10 years at 11.85. Both funds are allowed to maintain sizable individual stock positions. However, the firm warns that it may be difficult to quickly unwind these sizable holdings without impacting market prices. Shockingly, it doesn't. I'm not sure if they mentioned this. The losses there that they took earlier this year. Well, let me get to it if there is that. But that did happen. Um, their methodology. They picked stocks from RenTech Technologies 13F portfolio as of the end of fourth quarter of 2024. Equities are also popular among elite hedge funds. We know those names. Why are they interested in stocks and the hedge funds pile into? Reason is because the research can outperform the market by imitating the top stock picks of best hedge funds. Quarterly newsletter strategy selects 14 small cap, large cap every quarter and returned 374% since 2014, beating its benchmark of 218% points. You know, when you look at the rise of Bitcoin or the S&P 500, I don't know, but that might be good. But I do know a lot of the firms deal with futures and options on futures market. So here's the mention of the Apple, blah, 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 blah. Let's see here. I don't know. So yeah, Apple ranks fourth best stocks to buy according to the firm. They acknowledge the potential for Apple as an investment. Our conviction lies in the belief that some AI stocks hold greater promise for delivering higher returns. AI stock that went up since the beginning of 2025, while popular AI stocks lost around 25%. I don't know if there's some. Okay, anyways, here's the list. Okay, I'm not going to go over them in detail, but yeah, there's all the history, all that. So number 15, Roboblocks. There's a reason there. We've got Robinhood. Wow, I'm kind of shocked on that one. Undervalued. Um, I don't know. That's the link from RenTech. Oh, went out a few days ago. Okay, anyways, um, we'll leave it at that. Okay, so let me think here. $42,000 quant course for a 325 hedge fund job. The good thing about this article, I'll go over all the salaries just so you know. So this is a course from Barrick, Masters in Financial Engineering, 29,000 for New York State residents and 42,000 for everyone else. Sorry, I don't make the rules. So obviously, you know, with this notion that pursuing master's degrees are worthless, but here we are proving otherwise if you can get in the program. Uh, so people are asking how high. Now, remember, if you go onto my channel, back it up. I always say this that without showing right now the number one area in finance, specifically in quant or HFT, is always going to be portfolio manager. They pay the highest in the millions. They don't care about your education. They don't care about your age. As I said, what they do care about is your track record over 2 years. And that's pretty well what they look at. It has to be verified as well. So, right here, chart based on Barrick's newly released report for its MFE students for 5 years from graduating. They're not exact, and I think it's safe to say they probably won't be exact, but let's look at this. Based upon our approximate readings of Barrick's bar charts. Okay, so here we have an employer type, banks starting at 180, 900, 275. And yeah, a lot of these jobs do pay out up to 900K. Hedge funds usually going to be the highest at 1 million. That's possible. Medium 325. Asset management the same. Okay, pay for Barracks 5 year after graduating by rule. The funny thing here is again, you don't see portfolio management. That's going to be the highest you'll get. Um, So if you're in buy side quant research, it's 1 million, medium 350. Obviously, that's going to depend upon the firm. We'll get in that with the Goldman Sachs. HFT 650, median. Funny enough, that's highest at 950, but concentrated at 650. That's pretty good. Desk quant 350, 300. Product development 300, 260. Portfolio management. Okay, so there it is. 250, 300K, 260. That's quite possible. But as I said, if you want top game, portfolio management, uh, from what I've seen, out of anything I've seen, if you look at the 5 hour video, portfolio management is clearly number one in those job pay scales. But outside of that, then yeah, quant research would come in there, risk management, okay, and machine learning data science at 250. You might be going, why is machine learning data science the pretty well at the lower end? I think that that has to do with there's just so many to choose from, and now with the AI, I've demonstrated the AI is basically going to replace a lot of these roles, and it can probably replace the majority of these roles. But the only one that may survive that will uh, where AI doesn't really affect um, any of these roles will definitely be portfolio management. Why? They're usually the top in the top of the food chain among all the different trading desks or research teams. Like Citadel have their own set of teams that are in a silo and they don't talk to other silos. A lot of firms operate that way as a way to compete against each other, and the highest performing uh, desk, I guess, call a team would be the highest pay. Out of that, the one that drives all that, because they're going to be the king dog out of all that, will be usually the portfolio manager. What I've seen with the arrangements that the portfolio manager will get a budget, and then the portfolio manager brings in their own team, their own specialists for everything. All these roles are usually um, yeah, portfolio managers are the ones. Again, that's from what I'm seeing in the high paying job roles. Each firm will operate differently, but I'm quite surprised that it's not the highest paying. I can tell you in England, the highest paying I've seen was always portfolio management. So you can still earn 1 million 5 years out of Barrick MFE, but you will need to choose your seat carefully. People earning seven figures are typically working as quant researchers in hedge funds. Yeah, I will support that notion. If you want to work in asset management or product development, machine learning, you'll earn a lot less. The reason is because what will put you in the top dollar with quant research because you're going to be basically a math genius. But again, I haven't shown publicly uh, the capabilities of the AI when it comes to quant research. Um, it's just as good as a human. I'd say even better. So again, right there, once the AI starts to percolate in these firms, a lot of these rules will be probably done away with or will be less valuable. So no matter what degree you have, uh, I don't know what to tell you because it will become just another commodity type of position where the pay scales will come down because now you're competing against an AI. I don't know, probably know a lot of people may not like that, but I'm a person that likes to live in a world of reality, not in some bubble wrapped kind of world. So this report suggests that graduates are mostly highly satisfied with the lives and the pay. There's not much point in doing a PhD. Yeah, I would agree with that at this point, given that the median pay for few Barrick MFEs who also have a PhD only 300. That's a good data point. But I think to add value, if you're going into quant research in terms of mathematics, yeah, that's where the PhD will come in. Unless, I mean, if you're going into PhD computer science, you're usually going to be in some kind of research role, not even in finance. Okay, It also suggests that pay for MFE graduates, some areas may have passed its peak. Yeah, again, that's because there's so much talent out there, and again, I don't think, right? I don't need to think. I know it doesn't make sense if I had a firm, if I was running a firm, like why would I have as much staff when I don't need to? I mean, theoretically, portfolio manager that knows all the three elements of quant and trading, the computer science, the trading, and the math. A lot of it can be done now as a portfolio manager and being able to know how to prompt AI, and a lot of it's so advanced that I think over time, um, a lot of these rules are going to disappear. The other thing is, with the AI, I would even dare to say that the portfolio management with what I've shown in my reports that are on my blog, that even with my summary reports from the 50 different type of future assets that you could trade, it comes up with the type of exact um, strategies that you would use for options trading, how much you should allocate. That's the job of a portfolio manager now, but I'm able to demonstrate that, um, or at least its capabilities. So, and I've only started really digging deep into AI since um, December. And what I saw in November, December to where it's at now, I know it's a huge magnitude difference now between today, where we are, and back 4 or 5 months ago. And I can imagine where AI and the results will be in 6 months from now, because there's so many competitors out there right now battling it out in terms of the LLMs, who bangs out the best code specifically, or the best whatever output it is. So it's forced to be better. And it's a very cutthroat business to be in the LLM, just for the cost alone, let alone trying to build revenue around it. So there's element of truth to that. All right, so let's get over to this article, which I find quite interesting. Like 10 years ago, so this article, VP level software engineers complaining about his Goldman Sachs offer. Obviously, this is going to be anonymous. So 10 years ago, if you were able to get a job at Goldman Sachs, usually that would be the top firm to go at, but now it seems that they're kind of chintzy, because when you look at this article and what they're paying in terms of banks versus hedge funds, you know, the hedge funds typically are going to pay higher. Okay. So the banks are not going to be as great. I think if Goldman wants to, and the like, in the big banks, they want to hang on to people, they got to pay more. I don't know why it's not like that, because they're competing against the salaries of hedge funds. So VP software engineers complaining, okay, now that software engineers are afflicted by employment, again, let's talk about that. There's a huge unemployment right now with uh, software engineers because of, well, just generally because a lot of companies are laying off. But at the same time, what's going on is AI. For instance, Microsoft just recently said they're going to lay off 3% of their staff. And don't forget a few other things about um, Microsoft were getting rid of their worst underperformers among all the staff over at Microsoft. That's a trend. I think that was by, I can't remember his name, the one of the former CEOs at GE, where they would get rid of the bottom 20% every year to keep the herd strong of their staff members. So they get rid of the worst performing staff. I jokingly say, and I think I'm going to be more serious about it, it's just a world they're preparing to bring in more AI into the rules. Even my platform I work on Wix, WIX, there's AI everywhere. I mean, we can't avoid it. Anyway, so a guy or a person wrote on Reddit, software engineer complains that he went through the recruitment process, and that's grueling in itself. And we're just starting to see now. I just started posting about how AI is now being used for the recruiting process. So when you do your interview, it's going to be an AI that will be interviewing you and recording what you say. So that's one big issue. Another thing is, I think it was IBM, Amazon. Amazon started it. I'm not sure who started it, but Amazon, IBM, they're getting rid of like 200 HR people because they know they can get the AI to do a lot of the recruiting. So that's happening as well. I mean, it's insensitive, yeah, but again, it's the way of the world. So there's that going on, and the recruiting process at these kind of firms are pretty grueling. So let's see what it says here. He went through the recruitment process for an engineering job in Goldman's Dallas office, and he already cleared interviews and participated in informal onboarding discussions when the offer was unexpectedly rescinded. That's another problem. There's people out there that will get an offer. Thing was with Amazon, and people will get a job offer in writing. They can have a family, sell their home, and then 2 days before they start, they realize that their job offer is rescinded, and they relocated to the city and sold their home. Right. So, I mean, a lot of these kind of corporations are kind of heartless in a lot of ways. So a few months ago, more recently, he claims that Goldman recruiting team approached him directly, offered him a VP role. There were some good conversations until suddenly the job was downgraded to associate with a significant pay decrease. If you, again, going back 10 years ago, I would be meeting people through my meetups where you'd be hearing, I'm an assistant vice president. And these people are recent, like just fresh grads at maybe mid 20s. And I'm like, how do you become an assistant VP? And that was at Morgan Stanley in the Montreal location. And it's just like they have millions of, well, not millions, but probably thousands of people at that level. It just didn't make sense on on how they define these rules. But anyways, and one other thing about Goldman is Goldman was considered a bank, and at the time, maybe 5 years ago, they said we're now a technology company because 30% of their staff are technologists, basically in IT programmers and the like. So there is that where they shift from the banking to a technology company. So Goldman Sachs' only comment for this article that was that it doesn't comment on internet rumor. Of course, that's all about PR. However, it's understood the firm also doesn't rescind special offers. Does it rescind unofficial offers or reserve the right to downgrade job titles during the application process? I don't think it's a question of maybe. Yeah, they do it. All the firms do that. So there's speculation on Reddit that sudden disappearance of the VP level software rules related to Project Voyage, Goldman's program for shifting senior staff to low-cost locations, and to the recent culling of 3 to 5% staff, most of whom were at VP and many of whom were software engineers. So right there, I'm not going to get into that article, but the funny thing that right out of the gate that tells me it's no different than at Microsoft, where if you have 3 to 5% that are at VP level, going back to what I said earlier about assistant VP, I don't know why they do that, and they are software engineers. So if they're following most likely the same rule as Microsoft business practices to get rid of low, their most underperforming staff. Again, that's just making an introduction to the AI's coming, and it's already getting rid of 3 to 5% of the staff. That it's a fact now. So hiring new VP software engineers looks counterproductive for the moment. Maybe these people writing this article doesn't understand what Goldman's doing. I visited the Goldman office, the newer one in Manhattan, New York. I will tell you, it's a problem for them to get good staff. They have to pay very well to track people into New York because of other firms are there competing. So what's been going on with Goldman is what they've done is they've opened, I believe, in Dallas and Utah. So what they've done is that they've now uh, they've wanted to go into lower cost regions like Salt Lake City, Dallas, because of the cost and the overhead of New York. And I think they also wanted to get into more conservative kind of uh, regions as well, Republican regions, I guess you could call it. Um, no different than Ken Griffin at Citadel is moving his entire shop from Chicago to Miami, Florida. It's the same idea there. Um, there is a political element there, I think, but a lot of it more than that is going to be the overhead involved to lower their overhead by moving over to either Salt Lake City, Dallas, and the like. And they've also threatened their staff. If you don't do it, you don't have a job. So there is that. Okay, so let's continue along. So one Goldman insider says not unheard of for verbal offers to lateral candidates to be rescinded at the firm. Just brutal. But anyways, whatever. He says this kind of thing isn't restricted to Goldman Sachs. Yeah, I think it's industry wide. Process from verbal offer to final approval is 2 to 3 weeks long and is at the mercy of whatever the COO and CAO are thinking about at the moment. I'd even say with the CEO who likes to play his disco music at parties with 20-year-olds, that might have something to do with it as well. I don't know, but I'm just saying that as a humor anyways. Let's check out this Reddit article and see what people have to say. One thing I like about Reddit, I'm not a huge fan of Reddit, but one thing I'll give it, there's real brutal honesty there um, as well. So we already know the history, so we don't need to go through it. I don't blame the guy, especially when you go through the brutal recruiting process. Uh, so let's see. Disappointing and stingy for sure. Project Voyage isn't just impacting current employees, but prospective hopeful talent. I've never heard of this Project Voyage, to be truthful. My 2 cents, hold out and trust your expertise and all the work for the right company and rule that wants and offers what you want. It might not be GS, but don't take a role that doesn't move your way. So my response to that is, look, if you're coming out of MIT, the top graduate, you can give that advice. But if you're middle tier from a middle tier school, and now with the economy the way it is and not the hiring, on top of um, the AI, I hate to tell you that's wrong advice because those days are done. I think AI is here. It is doing a major shakeup. And even though I don't like the business practices of Goldman Sachs and what they can do or any other general employer, especially in the finance field, they can get away with it and they will do it. And if you really want to work in these firms for the experience, you got to take what they offer. You're in no position to negotiate. Again, unless you're a portfolio manager, you've got great profit, verified return, and a company wants you and they're willing to pay you in the millions, you're like an all-star baseball player, right? And yeah, you're in a position where you can negotiate for things that you want. If you're coming out of middle tier, I hate to disappoint you that you will be just that disappointed because you take what you get. If you want to work at Goldman, there's no negotiating. Either take it or leave it. And this guy left it. And you'll probably regret it down the road. Please do not join. They suck you and throw you out even before you realize. Layoffs are so common. And there you go. Your performance does not count. Right. I mean, they're bloodsuckers. Let's be real. All who join GS are good performers and above average, though they go through the same intense screening. It's a culling process. It's called the Darwinian process, where lions and other predators will always go after the weakest in the herd. It's just the way it goes. So you got your predators, the higher ups, got to cut back on staff. If you're not in the forefront of the herd, yeah, you will get cut back. So the best are selected, and when they want to cut out people, there's no logic. All they do is reduce headcount to balance the cost. Possibly, yeah, but sometimes if you're not in a position to negotiate, you're not in a position. And it really boils down to how badly you want to be in the firm, right? And I have Goldman Sachs on your resume or your business card. The role is applied and have accepted an offer was initially advertised at VP level. Let me just see if this is the same guy. Yeah, no, Goldman Sachs. Who's the author here? Um, so Suvik KMG. Okay, so back to here. So the role I applied for and have accepted an offer was initially advertised in VP. They downgraded to associate before the interview. I wasn't given a reason, but I assume it's to do with the layoffs at VP level that's been happening. I was returning to Goldman from a few years away in grad school. I applied VP in a division. I experienced in MD said, right there, MD, managing director. We want you as a senior associate so you're set up for success. So it really boils down to your MD and your higher up that ultimately is going to bring you in. If they like you, that's true. They want to see you succeed. I guess if this was a new division by experience in the same field. They're just cutting costs and don't want to pay VP salary. I was told to kick rocks. I told them to kick rocks. Okay, that's fine. I second this. There have been layoffs at the VP. Many teams have, and this is like 12 days ago, have a budget cut as well. So even if they were hiring for V, they can't afford one right now. That to me is a bunch of baloney. They can afford it. They just don't want to pay. And with the AI, they could be multi billions in profit and still using AI and cut costs for sure. Um, I had a similar thing when I joined years ago. I had a master's degree and a year of work experience, though not directly applicable. They only offered me an analyst position. A couple of years later, when the market was better for workers, people started coming in an associate with my experience. It boils down to how much they want or need to expand. And sometimes it really boils down to how much you want it. I've also put up on my blog a very rare interview with Stephen Cohen. He goes through the recruitment process and really what for him, runs point 72. What he says is that what he wants are people that are doing what I'm doing, that have a brand, that doing quant, who are big time in programming, blah, 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 blah. That's who they want. They want those people with the initiative and and have the knowledge at all levels, be it IT, be it math, be it and right there, if you're not strong enough, even if you're not educated, you still have a fighting chance with AI. As I said, as long as you know how to harness it, I guess the right word. In my opinion, Goldman Sachs is not the same company it was when I joined. Last year saw revenue at the second highest recorded, but comp was terrible. Why? Because all that cash probably going to be reinvested in the company. I mean, it's a stock, right? So they got to they're with any company out there that's on the stock market. Really, their priority is the shareholders and the industry that they're competing in as well. So when you're just a pay peon in Goldman Sachs, a well paid but not um, uh, ultra uber paid, and to fight your way to the top is not easy as well. There's no longer incentive to keep your best performers, but rather desire to see who will stay despite uh, crappy comp. That's true as well because I think for them, I think a lot of firms are also about loyalty, who's willing to stay, so they test them. Um, yeah, so there's that as well. But to say incentive to keep your best performers, I hate to tell you, but the best performer now will be AI. Don't like saying it, but it's the truth. It's brutal truth. I was down level after an interview, though. I received positive feedback, and given my years of experience and current comp, doesn't make sense. The associate down level is also a huge pay cut. Then don't join. I heard work-life balance is bad. Well, yeah, because you'll be sleeping in a tent under your desk. Enjoy. That never changes. It's best when I started seeing the younger generation started to complain. that they didn't like the fact that they had to pump out Excel point presentations that nobody reads, and they spend a lot of overnight. This is part of their old way of doing it. Gruel, gruel, grind, grind, gruel, gruel. They're just doing it because they can get away with it. Because a lot of people line up to work at places like Goldman, and they know it. In addition, if they pay you less, then it's a no-brainer. Do not accept. But where else do you go? Where else can you say you have prestige in a firm like Goldman on your resume? Not very many. I hate to tell you. And I don't think working in a big tech's any better. From what I've seen, HCM has a final say on the title, but the term, the team, the interview can recommend downgrading the title if they feel you're not ready for that level, but they want to hire you. I'm in compliance, so the division may change this. Um, I think it's human capital, but Ho Chi Minh seems valid. He really has large influence. I don't know what Ho Chi Minh refers to, but whatever. Okay, let me help you get some perspective. VP level SDE at Gold is paid less than uh, is paid less than an L5 Amazon SDE, which is just one level higher than a fresh grad. We're talking 2 to 3 years here. This is not a real VP title. Never was. Said earlier with Morgan Stanley with the assistant VP. You're not really anything until you reach maybe partner level, and there's only last I heard is like only 25 partners. Uh, I don't know. I don't know my numbers, but I think it's 25 partners in Goldman Sachs, and then they have the managing directors, and then it goes right up to the C level management. That when you get there, then that's worthwhile for sure. These people are cheap. You're fodder for lazy higher ups. Wow. You posted this on Blind too. Yeah. Yeah. If you want to know other truth, that is a great app to see how employers treat their staff on Blind. So check out that app. That would be an interesting. I did check out. There's some very interesting conversation there as well about these firms. A similar situation happened to me at JP Morgan. Went through the loop for VP. Again, these are not VP. These are just like, yeah, I mean, just to look good, I guess. But got an offer at the end after they had wasted my time, which was for a associate. Anybody needs to understand when you're a fresh grad, 2, 3 years experience, you will be an associate. I mean, I know the banks, I don't know why they put out those rules as a VP. It doesn't make sense. Like it's a very brutal competition to get up to the higher levels. So you got to be in this firm for like probably 15, 20 years to get to that level. I told them to kick rocks, and they ended up coming back a few months later with the same offer, but for a VP, which I parlayed into a higher base salary. My 2 cents is not accept something you know you're above if you're not desperate for the job. That right there is probably the best sentence I've read so far. If you're desperate, yeah, take it. Or if you just want to say, I've worked at Goldman, because that will put you like I mean, even at 2, 3 years at Goldman at like at a really low pay, that gives you a ticket entry into other big firms. Because when you start at these big firms, you will stay at big firms throughout your career. That's a big best tip I can give you in a world of AI or not. If you have that experience at a brand name company, you'll easily be hired and you'll actually get better attention, better response on your resume when you shop it to other firms. Um, that's pretty standard. Hey, sorry that you're facing this. I was laid off as a VP of engineering last week. My last performance review and feedback were good, yet I was impacted. This guy may think he was good, but there's probably people doing his review and say, no, you're not good. That's why I got laid off. They're reducing the VP count significantly under Project Voyage. It's better to look for other options in the market as GS isn't the company I thought it was. Never is. Your visibility is that all that matters, not the performance. I have seen people fooling the MD and making their way forward. Yeah, that's called kissing ass. If you're good at kissing ass, you'll move up very quickly. So if you know how to kiss ass in these firms and you're good at it, those are the ones that will get the attention. It's one of the reasons why I don't work in these corporations. They're bloodsuckers, and I like to keep myself and my sanity really. And I can be poorer for it, and that's fine by me. But at least I have my sanity and have a sense of freedom as well. And I'm not restricted as well. It's a big other thing. If I had a CFA or some kind of piece of paper uh, designation, I wouldn't be able to do what I do to speak freely on YouTube because I'd be restricted, highly restricted, worse than censorship online. As a VP, there's a high chance that they report to another VP who will not be doing your performance comp review, as you'll be at the mercy of the memory of the manager, as there is no proper self assessment of review of what you deliver. I don't think that makes a difference, to be truthful. Um, it it all rolls back to AI. AI is the one that will do the measurement. I mean, if you already got companies willing to recruit with an AI, what's the difference between that and an AI doing your performance review? And part of that, it's not just your performance review, it's how your trading desk operation does as well. My manager, another VP, told me that I should let MD know about my work. That's what the job of a manager. Then what's the job of a manager? I, I hate to tell you, these people are just don't understand how it works. I mean, either you are great in the political aspects of your career and these big abyss called corporations and knowing how to navigate it. These are people that just don't understand how it works. And it sounds like it's a lot more competitive. There's a lot more keeners out there that will take your job at half the pay, and Goldman and the like will take full advantage of it. And on top of that, you got to compete against other people going after the same promotion that you want. And it's like this, from what I'm gathering here, I feel bad for these people. They sound inexperienced, of no more than maybe 5 years in the field. I don't know. And they end up on Reddit. And we know about Reddit. As I said, it's brutally honest, yeah. But going through this thread, I don't see a lot of positivity for it. But you definitely got to know how to navigate through this muck with a job and a career in these firms. They're brutal, and the firms don't care either. Just how it goes. Agreed. Visibility is the only thing that matters, not performance. Yeah. So if you're a blonde wearing mini skirts, that is that visibility and has a worse performance? I don't know, but again, that's just the way the world goes, right? Lots of companies are doing budget cuts and having to reevaluate their process. Yeah, they're reevaluating their priorities in terms of using AI. I keep stressing AI because I've used it, I've seen it, I've experienced it. I put out videos on it, I put out content on it, I put actual raw reports in Word that you can download off my website to see it. And if that doesn't impress you, you shouldn't be in this field. And not only that, but the AI is not just coming for, I always say to people, AI is not coming after your job, it's coming after your career. Always remember that. If you want to work at GS, take the job and climb the ladder. It could be an opportunity. It's a huge pay cut. Wah, 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 wah. But this guy, okay, I said the previous one, that's probably the most um, logical. If you want the job at GS, you want the name on your resume, even if it's for like 2 years, 3 years, you got to know how to climb the ladder, know how to earn it, and fight your way for it. That's really what it boils down to. So here we go. What was the offer at VP or associate? I got my colleague in Hong Kong fired last week. She was a VP. The following day, they posted her role in LinkedIn. Guess what? Associate level. Yeah, I mean, I've heard people also. I should mention, if you're older, you get in your 40s and 50s, and they're paying you. And one Canadian bank I know, they're paying 150,000. for the job, that was a few years ago, they will get rid of you because they know, even back then, they will get rid of the person and bring in somebody who's a fresh grad and pay them 90,000. This is in Toronto, the pittance that Toronto pays. But the firm can learn, the bank can save 60 grand from doing that. And that's just another way, the way it goes. And, I don't know what more to tell you. Just compared to other offers you have, desperate if you don't get any offers, that's another problem. Consider other offers that are higher, have potential to get you where you want in the long run. And that doesn't mean that they have a foosball in the corner that it's a cool place and do your laundry for free either. That's like doesn't really matter. Consider the following things like 401k, health insurance when comparing. Good luck. Don't take it personally about the revocation companies are doing a lot. Belt tightening. This has been going on for decades. It's not like a one-time thing. It's always been like this. This is part of the corporate life. Short-term economic uncertainty globally. If GS is your dream company, and that's the opinion you have right now, then you should live with a pay cut. Exactly. Thank you. I don't know much about GS, but a good corporate culture with opportunities to learn and advance can be worth more than cash. Not just that, but if you want to have Goldman Sachs on your resume. You notice this on Reddit, the popular negative responses are always at the top. They're the most popular. So either you are the recruiter involved or a GST member. Oh, okay. Well, that's typical. You said it's a demotion and a pay cut. If you get a demotion still working, well, maybe you should be happy you didn't get fired. It's a horrible situation to be in, but you really got to figure out what you want to do with yourself. ChatGPT wrote this post. That's why the offer was rescinded. Multiple negative HR experiences, and you still want to join. Again, notice that you still want to join because of the reputation that Goldman Sachs will put on your resume. It is obviously a step backwards. Are you willing to accept after they played in your face like this? I know I would. So where's this guy gonna go? Working as a hot dog sales guy in Hong Kong in the banks? I've already rejected the down level offer. So where is he going? That's what I'd like to know. Okay, good. It shows you respect your value, and you could be poor too, working as a hot dog guy. That's fine. What are the salary ranges for VP associate, if you don't mind me ask? Well, read the previous article. That should be good enough. Honestly, I'd really be cautious about taking that role. As somebody being moved from a senior software engineer or VP down to associate engineer, that's a major downgrade in both title and likely compensation. No. Yes, it's a major downgrade because guess what? We have now AI here sitting in the wings waiting to replace and everybody else. And that's really what it boils down to. I hate to tell you. Even if your experience aren't exactly there yet, well, it sends the wrong message about their level and make it harder to move back up later. Look, the way we're going, especially in software engineering, I can guarantee you this. If you're in Toronto looking for a software engineering job, you won't get one. Why? Because there's anywhere from 1,000 to 3,000 people applying for that job. That's the reality we have here. And they say Toronto, Ontario, Canada is the world's toughest job market right now. And not a lot of people are getting hired because, well, the government just opened up how many million plus people to come in and work for $40,000 maybe as a software engineer in this city. But that's as I always say now that Canada, Toronto specifically, is the canary in the coal mine of how things will roll out in all aspects of the world, and namely that's one of the realities of Toronto. So maybe you should be happy to get that kind of offer and take it, and just be happy that you actually made it through. But hey, if the guy's in a position to do what he did to quit or not take it, he may regret it down the road. I don't know. Wow, there's a lot of comments here. Anyways, I'm not going to go into it, but hopefully you get my stance. Now, yes, we can whine about the situation. Yeah, we can do whatever about it. What can you do about this? Like I said before, if you go into my own site, there are solutions here at quantlabsnet.com. Look, everybody's in the same rule. If you want to get into more PM level, there's a couple of things. First, go in and join our newsletter here. And I don't release anything to anybody. But now, under the group section, I'm now just testing out just for the response of this to see how people are going to respond to articles like this about programming, um, all that. I'm also posting quant. I'm hoping you've seen the demos that AI is generating now, and I can generate from, as I said, Word documents and the like. So I did mention about AI. A lot of people are not going to like what I'm about to show you. I just posted this yesterday. Um, so in here, I think it's this one. Okay, so let me just roll. If you scroll through this, there's this video on YouTube, AI building your trading bot. That's a general PowerPoint of what I was talking about with where I'm at. If you want to specifically see how it goes from 50 reports in the futures market with analysis for both futures and options, all the institutional level of strategy development and the options that come with it. Again, AI generated, feed that 50 into an AI again, come back with a summary document that'll allocate all your proposed $100,000 trade to set up all the different strategies and the way to do it. This video goes through it, and I go one step beyond to generate the actual source code to generate a a automated trading system built in Python with a backend and a JavaScript HTML front end. All that whole process 100% generated. So again, this is why I don't know. I got to be the only person at this point being on May 13th, 2025, showcasing that. And then you can see here with the individual asset reports, you're able to get volatility analysis, option chain data, what called parity, risk frontier analysis, payoff diagrams, strategy identification, bullish, bearish, neutral, hedging. Arbitrage are options. Gives you an AI summary synthesizing the intelligence of what you want to trade. It will group based upon thematic groupings, be it metal, energy, agriculture, and the like. Risk profiling, correlation, AI generate dashboard so you can visualize it, see it, blah, blah, blah. And this is where we're at. So imagine banks can now do the same thing. They may be doing it. I just don't know about it. We don't know about it. But here, you can, as it says here, you can tailor recommendations for different portfolio sizes, be it 10,000, 100,000, generate trading ideas for individuals and come up with an actual trading system. So as an example, we could have cash futures using arbitrage, 40% of $100,000 portfolio potential, and go directional pairs trading. It actually recommends with reasoning what to trade and what not to trade. Long crude, short soybean, pair trade ES and NASDAQ, I mean, it's crazy. And then you could have specifically only options trading available. You could do high volatility, low volatility, skew exploitation, directional spread. And again, let me remind you, this is AI generating this. AI is generating everything end to end with this. 15% on cash reserve. This is AI being spat out. This is the professionalism that AI can give you. Okay. That's why it's important to understand this. So you can get to a point to be able to do this on your own for your own needs. Okay. So again, it continues with volatility analysis, arbitrage, optimal hedging, sophisticated option strategy, exploit volatility skew, theta, diversification and risk management. Of course, there's going to be a lot of warnings on this because it's simulated data. Unparalleled power in modern trading. Blah, 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 blah. On and on it goes. Right here. Right here is what we want to look at. So as an example, we go look at the the like of an open option, sorry, oil report. And again, I can do the same when it comes to all of them. ES, NQ, NG, gold, Bitcoin, Ethereum, everything. 50 different. And look what it can generate. Again, this is 100% generated by AI. You can see here we got volatility measured out, option chain data, which is simulated. We have, and I've gone over this, we got the correlation hedging math we could throw in, implied volatility using Black-Scholes, measuring all the Greek analysis, using all the call put parity, the Frisk frontier, payoff diagrams, all the different types of strategies for option, be it bullish, again, bearish, neutral, neutral strategies, and then it gets more sophisticated. You could do iron condors. You could do iron butterfly. You could do hedging strategies. Okay. You can also do futures floor prices, set your downside risk. Look at further analysis on the payoff diagrams and put option payoff. I mean, blah 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 blah. On it goes. Here it gives you an analysis using hedging. Again, this is AI. So we're already at a point where me, the little schmuck that I am, if I had $1 million, I could pump out these kind of reports. And this is just one, okay? And it just goes on and on and on. Okay, fine, great. But this is where that's just the start. Now here, the other one you can get called Strategy PDF right here, which is this one, okay? So this one's even more sophisticated. So this will be fed from around 50 assets. But the AI came back and said, well, there's only 15 tradable instruments out of the lot. So here, if we gave it, say, $100,000 portfolio, right? Then it goes out and starts analyzing with reasoning, I might add. I think it's already the AGI is in there with the general intelligence, the AGI, artificial general intelligence. This is a demonstration of it. So here we get the executive summary. So these are all the symbols that I fed it. Okay. It's Treasury, Russell, Ethereum, Bitcoin, copper, blah, 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 blah. Okay. So out of that, it comes back and it analyzes each and every one of the kind of report I just showed you, and there can be 50 of them using arbitrage, hedging, volatility, and put call parity as the core pillars, right? Or sorry, the different types of analysis. So here's the key strategy pillars that are built out. It's going to use arbitrage, hedge speculation, option strategies based around volatility, directional or income, and diversification and allocation. So it said, okay, give me what I should do for $100,000. So it comes back and says by sector, 40% hedge speculation, arbitrage 15%, 30% strategies, and 15% for cash reserve for margin. If I was to do options and futures, that's all it's for. Options and futures, but no equity, just to make sure we got that. I also specify, please make sure we're using forward guidance. So one of the more popular ways to do it is using ARIMA, also factors in the market conditions, volatility, interest, all that stuff. Okay. And then it goes into an introduction. So it tells me what I should do with a background, and it's very specific based upon those 50 reports on the most recent data. It'll talk about futures contract, options contract, and different if we're going to hedge, arbitrage, and the like. Okay. And then like we're I don't know how many pages this thing is. Let me see how many pages is. So um, yeah, it's 15 pages long. So you can see it goes out and extracts the data, right, with the Greeks. And again, this is AI. This is what Goldman Sachs does with an AI. They custom build. And this is like, why do I need staff, right? So it does all the options, right? Implied volatility, put call, all that fun stuff. The thematic grouping, which is important for managers so they know what they're getting involved with. And the AI will go out and look at all 50 of them. It only takes this thing maybe 15 minutes to run, right? To come up with this analysis. Okay. Are we going to be able to see put call parity, hedging? It gives an actual reasoning set of analysis based on the data I tell it. And then it'll tell me, oh, well, there might be some constraints, be aware. So then it goes and breaks it up by thematic summary opportunities across those assets I just shown. Okay. So here it's now measuring the annual volatility. Okay. So we've got here very high volatility in Ethereum, Bitcoin at 52%, uh, and da da da. And now the AI is smart enough to say, okay, who's this being built for? Is this being built for somebody who's going to trade in their 20s and 30s? Or is it going to be built for somebody in their 50s that are coming close to retirement? So that would be based upon their risk profile. So here it's able to also look at and focus on low volatile instruments, be it in the currencies or treasury. Okay. And then it talks about the volatility skew. I mean, it just goes on and on and on. And then it goes cash future arbitrage, option arbitrage, and then it goes into hedging with the numbers, calculating the optimal hedging that it would need, along with the variance reduction. Okay. And this can be processed in 10 minutes. Try to do this in the old fashioned way, it would take probably hours, days, I don't know. Right. So obviously you want in the most recent activity, you want low variance. Okay. Then it looks at the put call variance. That's the bread and butter for high frequency shops, risk management, profit. And it actually adds the different ways to trade and suggests it. So, for example, showed a $63 profit potential. This is analysis now. Um, this is analysis from those reports. Okay, so it will factor in all kinds of things: the cost of carry, transaction costs, execution risk, um, so on and so forth. We'll use the put call parity. It will show you how it will get applied. And this is just specific for the 1 day's worth of reports. I could run this every day and get a very custom based set of type of analysis here. Okay, so we got hedging strategies, speculation position. Again, the application, basis risk we haven't talked about. Um, Options heading for directional bets. And then we have specific only for options, volatility. And here, it tells you what might be recommended for this type of strategy. If you're going to apply a long straddle, okay, calendar spread long, all based upon 50 reports that are auto-generated with this summary, okay. Then we have low volatility, blah, 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 blah. Directional spread, bull call application, exploiting volatility, put call risk reversal, we haven't even talked about, theta for time decay. This is all options. Then it goes into now this is the key one here. Portfolio allocation and risk management for a mock $100,000 portfolio. So here we can specify all the different characteristics and check it out. It builds a framework for you. Okay. The things you should know about: core capital allocation, satellite allocation, diversification, liquidity and transaction costs, and capital per strategy per trade. This is the key right here. So if we have $100,000 allocation in a potential portfolio, 15% of it should go towards arbitrage, cash future arbitrage, put call parity, and it even suggests what measurement and how much that the potential profit would be for the ES, GC, SL, all using those, and then it comes up. Guess what? It comes up right there. Boom, boom, boom. Comes up with the suggested strategy. This is the reasoning in place. $5,000 in each of the two to three contracts each, with conditions of mirror report signaling, whatever that means. And I could go deeper and deeper with this type of analysis, going into a chat with it. Hedge speculation relative, so 40,000 or 40%. Okay, and then it says here, as an example, what should I do? Well, long CL, crude oil, future hedge, usually the reported optimal hedge, and it's suggested allocate 15 grand, short the ZL, soybean oil, futures hedge. Okay. And pairs trade as well. And then it goes on. Another 30 grand. Okay. And so on and so forth. So you can see why Goldman's at a point now where it can get rid of people or at least exploit them because this is what an AI can do. Okay. And then forward looking guidance considerations. Okay. And then you actually read it in depth, it will give you reasoning that nobody else. I've not seen anything like this. So come back with a conclusion um, as well. So you can download that. You can check it out for yourself from this post. That's AI. And on top of that, I could take that um, report I just showed you, okay, and I can feed. It depends upon what's generated. I could feed the whole thing and generate custom strategies with the code in Python and the HTML front end, JavaScript and HTML, and it'll co-generate all that for me or live code it. You could do it with C++ if you really wanted to go suicidal, but with the C++, unless you know how to do segment default debugging in C++ when these things break, and they have. And one of my last webinars, that's exactly what happened. So you have to be very well versed in it, but it gives you a leg up in terms of building out things with a code base to work from, with the suggested strategy and portfolio weighting allocation as well. So this is all just for demonstration purposes only, just making sure you understand that. But this is why banks and hedge funds and whoever else are in the position where they can get rid of people now because of this, exactly this. And I can generate this all day, all night with a custom code. Um, if you don't believe me, and you want to see some samples of it, all you really got to do is go into my file share here. Uh, okay, so I got my file share here, and I have a public one available. And here, file share. So here we have a free folder, public share. So you can download any of these coding samples, triple moving average, MES option trade trading bot, beta patterns, trading environment, moving average slope strategy. These are just samples of what can be generated. And I think one of them C++, all the other ones are in Python. So again, you can see it and exploit it. But here, what we've got now are a bunch of, uh, I don't know what I call them, but yeah, you can't compete against what I just showed you. You just can't. And again, if you want to know more, all I can say is you got two options. You get into the newsletter, call it, and find out what I'm doing every day. And it's just getting expanded more and more as well. So that's the solution. And the best solution is to do it yourself and learn and reverse engineer this stuff on your own and learn, or you can do this for yourself. And I think doing it for yourself is more profitable in the long run as you build up. That's why I'm moving into options because I've talked to everybody where they were able to blow up their trading account, do what I call the life-changing moments. It's always options, and it's always options and futures. Those are what I can say because the options market is always going to be doing well no matter what the market conditions are or the regimes as well. So that's all I can tell you is the solution. But banging your head against trying to get in these firms, unless you're like coming out of MIT with a PhD, your top dog in your class or graduating year, yeah, then you'll be in a of position of power, I guess, getting into these companies. But if you're not able to maintain uh, your performance in a firm, that's why a lot of these folks get basically fired or downgraded with pay cuts because these banks can get away with it. So that's the options I can present you. And if you're here watching this, great. That means you're dedicated. Guarantee you, if I looked at my YouTube stats, it'd be like 1 or 2 minutes people watch on average. And that's why they fail. That's all I can tell you. Anyways, I'll leave it at that. Thanks for watching. I think this is an important video to watch to really know what's going on out there in the future in this field because it matters. All right, we'll talk to you later. Have a good day.